Hey everyone, it's Monday morning, December 2nd, and welcome back to Capital Markets Quickie. I'm your host, Endrit Çela. Since it's Monday, that means it's time to look ahead at the key events shaping markets this week. With jobs data, Fed updates, trade tensions, and oil prices in the spotlight, there's a lot to cover. Let's get right into it. Before we begin, a quick note. Today's episode is sponsored by AMF Capital Asset Management Frankfurt. For tailored investment solutions and top-quality mutual funds, visit amf-capital.de. So first up, we've got the U.S. jobs report dropping on Friday. Stocks have been climbing all year thanks to strong economic growth, but there's always the concern that inflation could creep back up if the Fed lowers rates too much. Last week's Fed minutes showed there's still no clear consensus on future rate cuts, so Friday's report will be key. Economists are expecting 202,000 jobs added in November, which would be a nice bounce back after last month's weaker numbers due to hurricanes and strikes. If we get a strong report, it might challenge expectations for more Fed rate cuts, and that could shake up the stock rally. On Wednesday, Fed Chair Jerome Powell will speak at the New York Times Dealbook Summit. His comments will be watched closely for any hints about the labor market, inflation, and how the Fed's thinking about its next meeting in December. But Powell isn't the only one speaking this week. We'll also hear from a lineup of Fed officials, including Governors Christopher Waller and Michelle Bowman, and regional presidents like John Williams, Mary Daly, and Austin Goolsbee. So there's plenty of Fed chatter to tune into. Now let's talk about trade. Last week, President-elect Trump shook things up by threatening hefty tariffs. 25% on all goods from Mexico and Canada, and another 10% on Chinese imports. That's got markets jittery about a potential trade war. The auto industry is particularly vulnerable since supply chains are deeply integrated across North America. And over in China, analysts think Beijing might roll out new stimulus measures to counteract the impact. They're also saying this could push China to speed up its tech self-sufficiency drive. While Trump's pro-business policies might boost growth, the risk of tariffs adding to inflation could complicate the Fed's plans and weigh on global growth. It's definitely a space to watch. On Wednesday, the OECD will release its latest economic outlook. Back in September, they predicted global growth of 3.2% for both this year and next, and that the Fed's main rate could ease to 3.5% by the end of 2025. But with inflation nearing central bank targets and ongoing global uncertainties, it'll be interesting to see if they adjust those forecasts. And finally, oil. Prices dropped about 3% last week, as supply concerns from the Israel-Hezbollah conflict eased. OPEC Plus delayed its next policy meeting to December 5th, where they're expected to discuss extending production cuts. But here's the kicker. Both OPEC and the International Energy Agency are signaling weaker demand ahead, with global supply expected to exceed demand by 2025. So while OPEC Plus might keep cutting, the longer-term outlook is starting to look softer. And that's a wrap on what's ahead this week. From jobs data and Powell's comments to tariff threats and oil market updates, there's plenty to keep an eye on. Thanks for listening to Capital Markets Quickie. I'm Endrit Çela, and I'll catch you tomorrow with a brand new episode. Have a great day, everyone.